Mortgage rates finally getting a little bit of relief. You know, Jerome Powell, we got to give it to him. He didn't come out gun blazing. He was not as hawkish as we thought. Stubborn, but hey, he could have come out, pounced on us, dropped the hammer, been hawkish, been ridiculous, started saying stupid stuff. Because this week, as I released this week, a lot of Fed officials are talking. These Fed officials like to talk as their, you know what, their backside. But here's the problem, guys. I'm going to go back to this again and again and again. As I sit here and make this video week over week over week, we just look at the data. Some inventory in some states is starting to rise. You're starting to have your YouTubers and your people say, oh my God, there's a housing crash coming in Florida and Texas. But that's not what I'm focused on. We are starting to get inventory to go up a little bit at a time, a little bit, not much, not everywhere. We're starting to see that consumer. Look, you're a consumer. You're watching this. You're watching what you spend. You're focused. You're also wondering, man, my buddy just lost his job. I wonder if I could lose mine. You also realize you're probably not going to sell your house because these rates are staying higher for longer. You're also realizing shit's just expensive out there. Then we get news that the GDP missed. Then we get news that McDonald's, Starbucks, and all these other companies had bad quarters. The consumer of $50,000 below is starting to soften. Basically, we're getting signs. The job market's a little bit weaker. And this is what I will say to you, and I will keep saying this as many times as I have to, because eventually we're going to come back to this point. We're going to meet here, guys, everybody. I don't care. This isn't about politics. This is about reality. The reality is that we have full employment in this country. Supposedly the economy's not doing terrible. Supposedly. But we, as a country, do not have a balanced budget. We have excess of trillions of dollars that we're going to spend this year. Why are we spending so much money? We are stealing from my kids' to afford all this shit. And I'm having you stop and think about this. I just said, you're watching this video. Even if one of you, if you have kids, their kids, we are robbing from them to give you this life right now. You and I might not be, but the government is spending money. I don't care who's in charge, money out of control. Do you notice they don't talk about their out of control spending? Do you notice they talk about that they want to cut back? Do you also know the smartest, richest, famous people that go on CNBC, economists, all these people, their biggest concern is the money that was printed in out of control spending. Remember, QE, quantitative easing, when Mr. Bernanke came out and said before he started it in 2008, whenever the day was, that this is temporary. And the Fed's balance sheet then was 800 million and they're going to bring it back there. My friends, the Fed balance sheet is not 800 million. I don't know exactly what the number is, but I think it's around 10 trillion. We're spending out of control. We don't have this money. What are we going to do about it? It's frustrating. It's annoying because there's all these politicians that want to get reelected that are in charge of pissing our money away. I talk to clients here in California. The government here in California, they want to come after the homeowner. The landlord, the person that owns the property, and say it's your problem, your fault for rent control. Not us, but you, because you raised the rents. Why are rents going up now? Why are renters getting screwed? They can't buy houses. Why don't we have more houses available? Why don't we have more rental units? Why do we print money and give it to other places around the world, but we don't take care of our own? Why is the government not building their own buildings here in California? Go build 1 million units in California. Pay cash and charge rent and have a third-party professional management company manage them. And that will give you revenue. And then you save that money and then you go build more units. How did a real estate guy go from a 2-unit to thousands of units? But you want to blame us. You want to blame the people. So at the end of the day, folks, this isn't about elections. This is about politics. This is about simple fundamentals that the way we are going, the way we're spending is going to come to a halt. And I will ask you, if we're at full employment and the economy is doing so well, according to all these people, and all these people is just a whole bunch of people. I don't care what their beliefs are. I don't care their political. I don't care. It's the whole thing. What happens? Because it's going to. Because Jerome Powell knows it's going to, and everybody knows the economy is going to soften more. Unemployment's going to go up. What happens when it does? Can you answer the question? Because I keep asking it. Nobody has an answer. If things are going to get worse, if you talk to Logan at Housing Wire, he has 6 measures for a recession. I think all 5 flags are up. The one that's still missing is the job losses. when the job loss hits, he goes, cool, now we can start looking at when the recession is going to hit. And Logan studies data, not emotions, not politics. He doesn't need to get reelected. He loves what he does. He's passionate about it. That's why I follow people like him, because they're just studying the data, folks, day after day, week after week, month after month. We're not standing on there going, we should do this. They don't even know. So what happens in 2 years when we look back and go, you should have cut. We should have stopped spending that money, because we are spending money we don't have. We are stealing money from future generations. And I'm making this point here because as I listen to all this information, all the data, all the people out there that I like and trust, where they manage money, economists and all this that follow the data, their biggest concern is the money spending problem. And eventually this comes to an end. And we wonder why inflation's high and all this stuff. You don't think the government has to do with any of the inflation? You don't think the spending or getting rid of student loans or, forgiving this, or there's still helicopter? There is. There has to be. It's not over. So I will ask you, when the stimulus slows down and the money doesn't flow and people lose their jobs, what's going to happen? Recession. Then what happens when you have a recession? Rates drop. Then what happens when rates drop? In the real estate business, that's good. We've been waiting. If you want to buy a business, that's good. If you want to buy a commercial property, that's good. If you want to have lower credit card payments, that's good. You want a home line of credit, that's good. You want to buy a car, that's good. You want to get a student loan, that's good. You want to do anything that revolves around financing, that is good. And people ask, are we in stagflation? We're not. Remember, stagflation requires three things. One, GDP is coming down and inflation stubborn. One, GDP down, inflation stubborn. So we got 2 out of 3. The last one is employment needs to go up, bad. Job market would be bad, which is not. So we're not there. But a lot of people think inflation is still coming down. Let's see what happens. Because you look at the underlying things, car insurance, that's up, things like that. It's problematic. But when you step back, let's be honest, guys, just step back and think about the world we live in. Go back to 2018-19. A lot of shit going on. We would have had a recession for sure, probably in 2020 regardless, because we were set up for that. COVID, yes, it was real, but the money printing was fake because they used all that money to cover up a lot of things, pay down a lot of things. But remember, now we're paying the piper. But if you go back to those times, a lot of things were different pre-COVID, a lot of things. And now we're here and we're dealing with it. So kind of, every once in a while I go on my rants, and I have been more because I'm very concerned about all this stuff that's being fed to us. And here's the last thing I will say. At this point in time, I don't think we're going to get a rate cut before the election because it's going to seem political. Can you believe that? I think that if we get the rate cut, it's going to be seen as a political move and not the Fed's actually wanting to. So now we might have to wait till after the election. But we will see. Maybe I'm wrong. That's kind of what we're hearing. That's what I'm hearing. That's what I'm seeing. But that's here nor there. Because what do we have to talk to? Welcome back. Yep. It's another week. It's another video. And if you didn't know, my name is Kenny Simpson. If this is your first time here and you just listened to all that I just talked about, I apologize, but I really don't. Because here, I like to be real. I like to be honest. And honestly, I study and watch a lot of things. And what I see and hear is a lot of concerns about spending money. And how are we going to pay it back? And us robbing from future generations. And that's why I said that, because this doesn't end good. The longer this goes, I feel like the more problematic it's going to be. But for us in real estate, if you drop rates 1 or 2%, that helps our business. That helps people buy and sell homes. That helps affordability. It helps move things. This, where we're at now, is tough. And so with that being said, if this is your 10th, 20th, 30th, 50th time here, welcome back. My name is Kenny Simpson. If you didn't know who I am, don't what I do, quickly. I focus on 1 to 4 unit financing, been doing it 20 years, helped over 5,000 clients, funded billions of dollars. And why should you listen to me? So if you've listened to this video and somebody's worked with me, go call them and ask why you should work with me. Honestly, I think you should ask my clients. People do have nice things to say about me, but why would you work with us here at the Simpson team? It's very simple, guys. I've been doing this a long time. I'm passionate about it. I'm shooting this video right now. I'm shooting this content because I want to give back. I want to help you. I want to break down the nonsense and the noise and all the bullshit we hear out there. Why not support me? Why not support somebody that's waking up, going after it, working hard, and trying to solve problems for clients, trying to give them the best solutions, the best loans, the best financing, and give them all the knowledge that I have, and I'm passing it on. But check me out. Go online if you don't know about me. Look at my bio. It's all there. Don't need to say much about it, but I do appreciate you guys watching. I really, really do. I appreciate all the feedback, all the comments, the texts, all that stuff when I talk to you. I really, really do. That's why I keep doing this, because I want to get back to you guys. I want to make sure that I can figure out what's going on out there, try to break it down, and try to give some clear direction of what's going on. It's very hard in this crazy world because people are coming in and influencing things that shouldn't be, and that's why we're here. You know what I mean? If we just let the markets do its thing, then people coming in and manipulate, buy this or buy this, doesn't help. And that's why we're here, is because of both of those. Mortgage rates, we finally get a break. We finally got a break for mortgage rates because Powell did not punish us. He wasn't as hawkish. The data's coming in more favorable for lower rates. Bad news is good news for rates. Good news is bad news for rates. What's bad news? GDP misses, jobs miss, inflation miss. What's good news? High GDP, high job growth, high inflation numbers. That is not good for rates. That's not good for the Fed. That's not good for rate cuts. We need the opposite. And honestly, we need the economy to chill out, cool down. We do. So the more of that, the better. But remember, last week, though, we had a lot of data. A lot of stuff came out. It's a mixed bag. Still, stuff is all mixed over. A lot of confusion because, weeks prior, it was higher. Now, lower. So a lot of confusion. We got to keep pushing through it and see what happens. As I mentioned, a lot of Fed officials speak this week. So that's pretty crazy. But here's one thing. Warren Buffett in the news. Warren Buffett had their Berkshire Hathaway meeting where everybody goes to Omaha, Nebraska. He's still kicking. Charlie Munger's first year that he has not been there. So it's definitely a sad year. No, I did not attend. I just listened to some of the video footage. But one thing I want to mention, and just pay attention when I say this, because you have to listen to what the smartest, wealthiest people are doing. He sold some of his Apple stock, but his goal is to get to $200 billion in cash. He's sitting on it because he has not seen anything great to invest in. Do you guys understand what that means? That means anything he's looked at, and trust me, I'm sure he sees a lot of deals, everything, has not caught his eye. The other thing why he doesn't care is because he has a majority of his cash in 30-year T-bills, which is floating treasury rates. So on 100 plus billion, he's making 5.34%, he says. Why would I do anything? Think about it. Pre-pandemic, he was sitting at, let's say $100 billion. He's at 80 basis points. He's making $800 million. If he took $100 billion and he made 5.34 million, he would make $5.34 billion in interest. See that little number went a little higher? Yeah. So he's chilling in T-bills. And he has no interest in buying anything until it makes sense. Maybe he's waiting for carnage. Maybe he knows it's coming. I don't know. But $200 billion, that's a lot of money. One of the things I want to talk about that comes up constantly, it comes up whether you're renting a unit, comes up if you're buying, is changing a job. What does that mean? What if I change a job and I went from a W-2 to self-employed? Is that a problem? Could be, yes. What if I change a job and I went from, self-employed to W-2? That could work. What if I went for a job and I was paid, salary plus bonus plus overtime, and I go here, what can we use? Look, it's very simple. If you went from a salary to salary, you're in the green. If you went from W-2 to self-employed, could be problematic. Reach out to us. We might have a program. If you went from self-employed to a job, we probably can take care of you. If you went from W-2 salary, bonus, overtime, whatever, any of that stuff, RSU, if you know what I'm talking about, you know what I'm talking about, and you go to your new job and you're getting salary plus commission bonus, and we haven't got that bonus yet or that commission, we cannot use it until you receive it. So we have to calculate your purchase power, but based off of that salary, not bonus unless you actually received it. So if you need to wait, you might have to wait because that might push you over to the new threshold. Another scenario that I want to talk about. What if your husband is self-employed and you're the wife and you're W-2'd? And he's self-employed income is you're writing off a lot of stuff, or there's unexpected expenses, you put a lot of money back into marketing, we can't add back, whatever it is, but your W-2 looks good, but this is weighing you down. We could actually go 12 months bank statements on the business, still go W-2 and still can help you out, get that jumbo, whatever loan done. There's ways around it. That's why the non-QM market's healthy, so we can get those done. So if you are any of those, have those arrangements or having problems not getting this done, went to a bank. If you go to a bank, they're going to tell you no. Go to a broker, call me, I can help you out. But those are some of the things I'm hearing constantly about people are struggling out there. Let's go to a couple videos that I wanted to listen to.
Young home buyers are extremely negative on the availability of housing in the country at this point, with 68% calling it non-affordable and only 6% of young Americans saying that housing was both available and affordable, according to CNBC's latest Generation Lab poll. Joining us right now is Danielle Hale, Realtor.com's chief economist. And Danielle, I have to say, it's not surprising to hear this from this group of them because the numbers are pretty horrific. I couldn't believe how much money you need to make in the top 10 markets to be able to find housing. And it's not unique to just those top 10 markets. What's happening?
Yeah, so this isn't a new phenomenon. We've been talking about the undersupply of housing for the better part of the last decade. We can see that relative to pre-pandemic levels, housing is down 36% when we look at the for sale market. So there are 36% fewer homes for sale, and home prices have gone up by about a similar margin, 36% combined with higher mortgage rates that buyers are facing right now. Those higher prices mean you need to earn over $100,000 in 34 out of the 50 largest metro markets to buy the typical home for sale. So we're not talking luxury properties. We're talking just the median home that's available for sale today.
If you look at the top of the list in terms of most expensive, most of them in California. San Jose, you've got to make $361,000. LA, it's almost $300,000. San Diego, almost $260,000. And then San Francisco. I mean, that is pricing out an entire generation from this housing market.
It's another, I think, issue of being, things are going well, and then we totally overspent in terms of fiscally as well in Biden.
If I was a professor, I'd give them an F. Basically, they misdiagnosed COVID and thought we were going into a depression. The Fed did too. I worried about it too in early days. The Fed eventually pivoted, better late than never. Treasury is still acting like we're in a depression. It's interesting because I studied the Great Depression, and you had a private sector crippled with debt with basically no new ideas. So interventionist policies were called for and were effective. The private sector could not be more different today than it was in the Great Depression. Their balance sheets are fine, they're healthy, and have you ever seen more innovative ideas that the private sector could take advantage of now? You got blockchain, you got AI, you got the whole thing. All government needed to do was get out of their way and let them innovate. Instead, they've spent and spent and spent. And my new fear now is that spending and the resulting interest rates on the debt that's been created are going to crowd out some of the innovation that otherwise would have taken place. We've got a 7% budget deficit at full employment. It's unheard of. And this is when you've got grid spending, you've got defense spending, you have data center spending,
for AI.
And then, of course, you have green. Yeah. So this spending is going to take place. You're going to build a capital stock. How do you build a capital stock when government is intruding with regulations and all this spending? And it's just sad because I think we're looking at one of the most exciting periods in terms of potential productivity and enhancing investments ever. And why we're spending like we're still in the Great Depression is beyond me. And they haven't stopped, as you know. They're trying to circumvent the Supreme Court to give money to kids who had the opportunity to go to college, who haven't repaid their loans. Harlem Children's Zone, our motto was always, get them into college so they have a shot. These are kids that went into college, and we're talking about spending hundreds of billions of dollars put in their pockets. I assume it's because of the election. Even they're now floating ideas for Fannie and Freddie to change the rules so you can refinance. You can take out a second mortgage and you get to keep the rate on the first mortgage at whatever you did during COVID. There's one spending program or another. We don't need spending right now. We just need the government to get out of the way and let the private sector do its thing.
Hey everyone, that's it for this week. Thanks for watching. We will keep watching data. We keep watching the news. But if I can help you or my team, please reach out. You know how to reach me. Thanks so much for watching. Until next week, have a good week. We will see you soon. More data, more drama, and quit spending that money, the government. Just get out of the way and let us do our thing. We are capable, we're serious, and I think at this point, you're just getting in the way. Talk to you soon.